Welcome, everyone. We're just waiting on people to arrive here. Okay, we'll get going. Good afternoon. My name is Josh Stripmatter, and I'd like to welcome you to Stripmatter Wealth Smart Money webinar series. Thank you for joining us today. Our presentation is titled Supplemental Insurance, Filling in the Gaps. Dickerson of KD Insurance Solutions, LLC. For those of you that don't know us, we are Stripmatter Wealth Management Group, a registered investment advisor located in downtown Fort Worth, Texas. We specialize in investment management, financial planning, estate planning, and real estate investing. We've been in business since 2007 and serve clients throughout the United States. A little bit of housekeeping before we get started. All of you have access to the chat feature. So if you have any questions, please don't hesitate to type those in and we will be happy to answer those for you. Also, we will be sending out a replay of today's webinar via email. So if you missed something, don't panic. You will have the ability to watch it again. And you are welcome to forward these presentations and any of our presentations to your friends and family if you think it would be beneficial. Today's webinar is meant to be purely educational and not meant as tax or legal advice. Please talk to your licensed professionals before taking action on any of the information in this presentation. For more information, including key disclosures, please visit our website at stripmatterwealth.com. Now let me introduce our speaker today, Kelly Dickerson. Kelly started KD Insurance Solutions in 2023 after a long career in the medical field as a physical therapist. She graduated from Texas Tech University Health Science Center. She currently specializes in guiding people with risk management through decisions involving health and supplemental insurances. Kelly enjoys outdoors activities, exercising, meeting new people, and traveling. So without further ado, I'm going to hand it off to Miss Kelly. Welcome, Kelly. How are you today?
Thanks, Josh. I'm doing great. I really appreciate the opportunity to get to speak with you guys and the opportunity to maybe provide some helpful education to your clients. On a quick side note, I just want to say how much respect I have for you and your team members. I've had the opportunity to get to know Josh, Mark, Tamara, Jennifer, and several other team members over the past several months. And I can't speak highly enough about the kind of people they are and the kind of services they provide to their clients. But many of you probably already know this. So
thank you, Kelly. I appreciate that.
Thank you. Thank you. Okay, so you get this pulled up. All right. So as Josh mentioned today, my presentation is on supplemental insurance, filling in the gaps. And one thing I wanted to mention is that the information today is really targeted for people under the age of 65. I don't deal with Medicare as of yet, so none of the information I speak about will really be targeted to people over the age of 65. I wanted to give a little bit of background on myself, kind of in addition to what Josh mentioned. So as he mentioned, I'm a health insurance broker, and I work with individuals, families, and small businesses with up to 50 employees, providing them with health and supplemental insurance options that are really meant to be customized to fit their needs and their budgets. In addition to working locally in the Metroplex area and throughout the state of Texas, I'm currently licensed in 27 states, so I do have clients in other states throughout the country. So kind of diving right in, supplemental insurance. So what is it? Supplemental insurance includes many different types of insurance policies that you can have in addition to your main health insurance coverage. Often, having supplemental insurance helps to decrease costs associated with copays, deductibles, and other expenses depending on the extent of coverage. It's really meant to add an extra layer of protection of coverage by helping you meet out-of-pocket expenses and other costs not covered by your main health insurance. These are often referred to as gaps in coverage. And so supplemental insurance can really enhance your financial security, offering added protection for your medical expenses. While some supplemental plans cover specific services, such as cancer treatments, others provide a lump sum of money that can be used for medical or non-medical expenses, such as mortgage payments, rent payments, car payments, childcare, utilities, and groceries. And as many people know, a lot of people are veering towards high deductible health plans to save on monthly premium cost. So supplemental insurance plans can be really helpful to people who have high deductible health plans. It allows them an opportunity to get an insurance plan with a higher deductible that costs less per month and supplement it with a policy that would be less expensive than having a lower deductible health plan. Okay, so next I'll dive into a few different types of supplemental policies. So this is kind of a short list to start with. So we have fixed indemnity, hospital indemnity, critical illness, cancer, heart attack and stroke, accident, long-term care, dental, and vision. So next I'll dive into a little bit more details on each type. So to start with, fixed indemnity plans provide a set benefit amount per scheduled medical expense or event, as opposed to a share of the total covered cost after a deductible, like many of us are used to with our major medical insurance plans. If paired with a major medical plan, a fixed indemnity plan can provide an extra layer of protection in the event of a serious injury or illness by paying you a set amount of cash benefits for specific covered medical expenses you incur. Next are hospital indemnity plans. These plans provide payment to you based on hospitalization or other specified health services. They can be very helpful, of course, in avoiding huge medical debt. As we all know, it can be very expensive to be in the hospital for several days. Covered services generally include hospitalizations, intensive care, and critical care, but can also include outpatient surgery, ambulance services, and emergency room visits. Some of these plans also include benefits for outpatient services such as doctor's visits, therapy visits, urgent care visits, prescriptions, lab work, and imaging. The next type of plan is a critical illness supplement. These plans help to pay for costs associated with serious illnesses such as cancer, heart attack, stroke, coronary artery bypass surgery, renal failure, organ transplant, and others. These policies come with diverse benefit amounts and typically pay in lump sums to you that can be used to cover medical bills or non-medical bills. Some even allow you to add riders where you can be paid for the same critical illness if you recover and are later diagnosed with the same illness. Cancer plans, of course, pay for charges related to cancer. Some have no lifetime maximum for the policy, while others have a capped benefit amount. There are types of cancer plans that pay for a percentage of specific cost. For example, up to $1,400 for immunotherapy, chemotherapy, or radiotherapy treatments, while others pay a lump sum benefit. The next type are heart attack and stroke plans. And I wanted to note that I have a typo in this section. It should read that only pays for charges related to heart conditions or stroke. So these plans pay for charges related to heart attacks, strokes, heart transplants, angioplasties, coronary artery bypass surgeries, and other heart-related procedures. Accident supplements include some policies that cover lower cost accidents, while others provide more catastrophic coverage for more major accidents. They're similar to other plans in that some plans pay specific benefits for injuries caused by accidents. So for example, $800 for a fracture of the lower leg versus other plans that paid for all covered services related to an accident up to the benefit amount. On the lump sum form of these plans, you can use the money to pay for medical and non-medical expenses. A lot of parents like to have accident supplements, of course, for their kids, especially when they're involved in sports or just active in general. But of course, we all know that your kids can go outside and play and hurt themselves, or they could fall off their bike while riding it down the street. So they can be very helpful to offset some of those costs. One thing that's also interesting to note is that some accident policies actually provide coverage for on-the-job injuries and can even pay in addition to workers' comp benefits. Next, I'll touch briefly on long-term care plans. These plans provide nursing home care, home health care, and personal or adult daycare for individuals aged 65 or older with a chronic or disabling condition that needs constant supervision. Nearly 70% of 65-year-olds will eventually need long-term care services or support, according to 2020 data from the Administration for Community Living, which is part of the U.S. Department of Health and Human Services. Women typically need care for an average of 3.7 years, where men need care for an average of just over 2 years. Regular health insurance doesn't cover long-term care, and Medicare won't help much either. It only pays short nursing home stays or limited amounts of home health care in specific instances, such as for rehab after a hospital stay. Most of us are probably familiar with dental and vision plans, but there are a few things I wanted to note about these. In addition to the benefits they provide, for example, with dental plans that help provide preventive care, such as routine cleanings, it's also important to note that oral health issues can lead to elevated levels of harmful bacteria, which, if introduced into the bloodstream, can worsen medical conditions like diabetes and heart disease. When we're talking about vision plans, it's also important to know that you should be getting regular eye exams because they can also detect serious medical conditions such as aneurysms, brain tumors, diabetes, and other diseases. Okay, so now on to the fun part, statistics on some of the bad things that we can all face. Obviously, there are a lot of things that you can research as far as medical conditions and statistics, but I decided to focus on just a few that probably are more important to note. The first one talks about how some of the most common surgeries can range from $25,000 to over $100,000. So even if you have major health insurance, there'll be out-of-pocket expenses that are associated with those surgeries, and either being at an outpatient surgical facility or having your surgery in a hospital. The next point talks about how, on average, someone in the United States dies of cardiovascular disease every 34 seconds, and someone dies of a stroke every 3 minutes and 14 seconds. That's pretty eye-opening. The next one is also pretty eye-opening, and it deals with cancer. So the American Cancer Society projects nationwide cancer cases to surpass 2 million in 2024, which would amount to nearly 5,500 cancers being diagnosed daily. And I'm sure, on a side note, that most of us could say that we know somebody, maybe in our own family, perhaps, who's been diagnosed either with cancer or a heart problem, maybe even who suffered a stroke. So it highlights the prevalence of some of these conditions. And in addition to those points that are already on the slide, I wanted to note that as far as cancer goes, it's estimated that 39% of Americans will be diagnosed with cancer in their lifetime. When we're talking about dementia, an estimated 6.7 million Americans aged 65 and older were living with Alzheimer's in 2023, with this number expected to jump to 14 million by the year 2060. Lastly, on the slide, we'll talk about accidents. So in the year 2021, 62 million people, or about 1 in 5, sought medical attention for an injury, increasing about 12% from the previous year. So you can see how some of these conditions can really impact many people and probably have impacted some in your own life. Next, I wanted to highlight the impact on your finances that medical bills can have. Some of you may know this, but some of you might not. Medical bills are the most common cause of bankruptcy in the United States, accounting for just over 66% of all bankruptcies. About 60% of medical bankruptcy filers have at least some college education. And the average age of someone filing for medical bankruptcy is about 45 years of age. I thought it would be helpful to go over a few specific examples of different supplemental policies and how they can help offset some of the medical costs associated with a few examples. The first one is an accident policy. So in this example, while playing outside, Tracy's daughter falls off her bike, and Tracy calls an ambulance to take her daughter to the hospital. Her daughter's treated for a broken arm and a concussion. Tracy now owes $8,224 in medical expenses. Tracy has a supplemental accident policy with a $10,000 benefit level that pays this benefit regardless of benefits paid by other insurance. The policy has a $250 deductible. So the total benefit paid to Tracy is broken out. The benefit would be $8,224 for the associated medical expenses, but she has a deductible of $250, which is initially subtracted. And that leaves her with a benefit of $7,974. Tracy still has just over $2,000 of her daughter's accident benefit left, as well as her own $10,000 benefit of accident coverage for the rest of that year. And then when the following year starts, the benefit amount will start over again. So you can see how this can be very helpful to somebody in their finances. The next example is one of a hospital indemnity policy. Jim has a major medical health insurance plan and a supplemental hospital indemnity plan. He goes to the doctor for an upset stomach, and the doctor recommends he stay overnight in a hospital for observation. He's discharged after spending 2 days in the hospital. So the first line shows the out-of-pocket cost associated with Jim's major medical health plan. So he incurs a out-of-pocket cost of $3,000, which came from $1,500 copay per day for being in the hospital. And then the next areas highlight the hospital indemnity plan benefits. So in his particular plan, he received a benefit of $4,000 for hospital confinement for sickness. His calendar year confinement deductible was $2,500. And so the benefits payable to him for being confined to the hospital were $1,500. Added onto this, he had a hospital admission benefit that was a part of his policy. So for being admitted to the hospital, he received another $1,000 from his plan. So adding the $1,500 for the hospital confinement and the $1,000 benefit for being admitted to the hospital, he had a total benefits payable of $2,500. Subtracted from his out-of-pocket costs for the major medical plan he was on, that left him with an actual out-of-pocket cost of $500, significantly decreasing the cost to him.
Hey, Kelly,
Yes,
I want to ask a question here. If I may.
sure, you bet.
So are you starting to see with the cost of medical insurance going just way up? Are you starting to see these hospital indemnity plans pick up in popularity?
Yes, actually I have. I've had more people ask about them. And I've actually talked more about them with people for that reason. Because a lot of people, for various reasons, either because they want an HSA compatible high deductible health plan, or because, I talked to some people who are struggling financially and they just can't afford the cost of a lower deductible health plan, and they're pretty healthy. They want to supplement it with a hospital plan that would help cover some of those other expenses. So that's a really good question.
Yeah, so that's what I think about these days, is that reducing your health insurance plan costs by using a high deductible plan and then supplementing with something like this, it's an effective strategy to try to reduce the cost overall.
Yes, it can be for the right person. And of course, if I talk to someone, who has more medical issues, I wouldn't recommend that strategy. But for a lot of people, they're honestly very healthy, and they are really trying to use their health insurance kind of as a financial safety net. And so it can be a good strategy for those types of people.
Okay, great. Thank you.
Thanks. Okay, so a good question would be, where can you start? So working with a knowledgeable health insurance broker can be a valuable resource in helping you discover what supplemental policies might benefit you the most, and then researching various options for you. It's important to note that health insurance brokers work for their clients, not the insurance companies. and prioritize finding the best suited policies for their clients at the best prices. There's no charge for using a health insurance broker. So of course, I'm happy to be a resource for anyone needing advice on which supplemental policies might benefit them. These were the references that I used in their presentation today. And then this is my contact information. So you can see my website address, kdinsuranceSolutions.com, as well as my email address, kelly@kdinsuranceSolutions.com, and my phone number. And if you do visit my website, you're able to schedule a free consultation where I'd be happy to talk to you about your specific circumstances and see if I could be helpful. And thanks, Josh. That's the end of my presentation. So I'm not sure if there are any questions that I could answer.
Yeah, folks, if you have any questions, feel free to type those in the chat feature now. It was off earlier, but I turned it on. So if you tried earlier, you can try again now. I've got a few questions for you, Kelly.
Sure.
While we wait for any other questions to come in. So one question I have is when you're talking about these supplemental insurance plans, so what's your typical client look like that's utilizing these plans? You just mentioned kind of healthy. So there, I guess you have to go, does that apply? You have to go through underwriting for some of these?
That's a really good question. It actually really varies as far as whether you have to go through underwriting or whether the plans are guaranteed issue. Mm-hmm. And so there are some, say, for example, many of the accident plans, you don't have to go through any underwriting. Some of the hospital plans, I would say you do, but they do vary a little bit by carrier. And then for those who might have a few medical issues, most of the carriers usually have a guaranteed issue option. It may make the benefits a little bit less, but they usually have an option kind of in most of their categories.
Yeah. Okay.
Yeah.
So what are some trends that you're seeing right now in your industry that would be relevant to people who are trying to make decisions right now around insurances or health decisions?
Right. I would say I've seen a couple. I talked to a lot of people in the last year who were struggling, to be honest, financially, and they were kind of in that category of being pretty healthy. They're like, it's very frustrating. I have to spend so much money on health insurance when I hardly ever go to the doctor. And then I never really have any benefit for it. But on the flip side, I'm afraid to not have it in case something happens. So for those people, the higher deductible health plans have been a good option. But several of my clients who kind of fall into that category would supplement that with an accident policy, or maybe a policy that has a combination of accident and critical illness benefits that would at least help them meet the deductible of their health plan and kind of cover that gap, so to speak. And then I've also talked with some early retirees in the last year who maybe have, 2 or 3 years until they hit the age frame where they can enroll in Medicare. And so they're trying to figure out the best strategies, for, of course, keeping their costs down and on that side of things. So some of them have actually asked about the hospital plans a little bit more, kind of thinking ahead to what if, I had to go into the hospital, and how would that complement my major health insurance plan?
Are you seeing people do the hospital plan in lieu of their major medical? Or is it always adding to?
Right. That's a really good question too. I actually do work with an insurance carrier who offers a really, really robust hospital indemnity plan that is one of probably 4 that they bundle together that are kind of meant to work symbiotically together. And so some people are going to those alternatives versus major medical insurance because they're very close to major medical. For example, one of those hospital plans provides $10,000 a day for the first 3 days that you're hospitalized. So it's a pretty robust benefit amount. But they also include coverage for doctor's visits, imaging, lab work, all of those things. So they really have a lot of the same benefits, but they don't cover things like maternity. And then they usually have a pre-existing clause. So that can be, that can be a turnoff to people, but that pre-existing clause goes away after 12 months. And so they can be a really good option for people as well to kind of act as their major insurance. But I'm really careful to talk through that with people.
Yeah,
And let them know that just having the hospital plan by itself is usually not enough. They need to
sure.
bundle it, so they're protected.
Yeah.
Yeah.
Okay, great. I
Yeah.
know a hot topic right now in the investment world is a lot of these weight loss drugs. The Wegovy and Majorno, I believe, is one of them.
Yes.
And you were talking about cardiac disease earlier. And, a lot of these drugs are helping people lose weight, and therefore the expectation is that we'll have less heart disease in the future. And it's substantial. They're talking about some big numbers in terms of what that means. And you can see Eli Lilly is one of the major companies that offers the drug that's out there, and they have both for diabetic people, and then they now have for
Yes.
people who are just looking to lose weight.
Right.
But Eli Lilly has shut up. I think it's the largest pharmaceutical company in the world now, just under $1 trillion in valuation right now. So
Wow.
there's a major change happening right now in the medical field with this. And who knows, this may be the cure for heart disease. We'll see. But
Yeah.
so it's kind of an interesting time in my mind and even with a lot of the biomeds that they have now as well. With I just read that they had a cure for sickle cell disease. So a lot of interesting things happening right now. But
Yes.
yeah,
It's always evolving, but that would be wonderful if they could use, the technology to help some of these chronic conditions that lead to just huge expenses for people.
absolutely. Yep. Well, very good. Well, I do not see any questions that have come through.
Okay.
So Kelly, let me share my screen one more time here,
Okay.
and I'll throw my, oops, bear with me one minute, folks. I lost my screen. There it is. So if you do have some more questions and you'd like to visit with us, you can give us a call as well. There's our information. And we can certainly patch you through to Kelly if you'd like to visit with her more. And then if you have questions about anything else, please visit us at stripmatterwealth.com. You can email us at info@stripmatterwealth.com. Give us a call at 817-210-3444. Otherwise, Kelly, thank you so much. We've enjoyed it, and look forward to seeing you again in the future.
Thank you, Josh. I really appreciate the opportunity again. It's been a lot of fun.
You bet. Have a good day. Bye-bye.
You too. Thanks. Bye-bye.